Will the 4-year cycle end? How low can Bitcoin go? And what will be the next immediate move? Let's go ahead and jump into the video. Okay guys, thank you for tuning in. I hope you're all having an excellent day today. In today's video, we're going to be discussing Bitcoin from a macro and short-term perspective. Discussing the 4-year cycle, what it is, what it means, and could we potentially be seeing the end of the 4-year cycle soon? If so, how low could Bitcoin go? And if the bulls want to reclaim control and push us into a bull run, what exact points do we need to see for a bull run to start? Alongside that, we're going to be discussing the smaller time frame price action in relation to the immediate price action and the next immediate move. Before we get into it, smash your like button, hit the comment button, and subscribe to the channel. We post videos for Bitcoin focusing on the facts, the data, the technical and structural information, and of course the relevant news events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the second link down below. You'll get access to charts, updates, videos, educational posts, analysis, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic events. If you are interested in trading and want to join our trading channel, we post exact entries, exact targets, exact stop losses for trading signals, shorts and longs for altcoin, Bitcoin, and Ethereum on a daily basis. You can find us and more information for that in the pinned comment in the free channel, including access to the main VIP group where you'll get all the trading signals. You'll also get access to exclusive group chats, the general chat, the trading and chart and education chat, the trade setup chat, the help chat, the news chat, and the daily video chat. If you want to join over 600 members, go ahead and contact me via that pin message. Let's go ahead, guys, and jump into the video. Starting on market data. 24-hour volume sitting at 54 million, down 26.4% in the last 24 hours. 24-hour liquidations at 54 million, down 39% in the last 24 hours. As for August, we are about 6 days until the end of the month, down 10.58%, moving into September. Keep in mind, guys, September historically is one of the reddest months of the year. We're not talking about one of the most bearish months in terms of percentage drawdowns. We do see larger percentage drawdowns in June. We see larger drawdowns in January. But if we're looking at the difference between the open and close, more importantly, focusing on the ratio between the ending price in comparison to the starting price per month over the last 10 or so years, we are more likely to see a red month in September, as we've only ever seen 2 green months. Now, this isn't something we're going into saying, well, this is clear and cut evidence that September is going to be red, but it is something we should be looking at, saying there's probably a higher chance historically that September is likely to be red than it is to be green. So that is something we're watching and moving into. Looking at volatility, the volatility index is still historically low. We are starting to see a 30-day push up just a tad, and the 60-day is still moving toward the downside at an all-time low. Moving on to liquidations, we can see in the last 24 hours of the 54 million in liquidations, 44 million came from those long positions, as Bitcoin annoyingly deviated to the top side once again. We had this bottom side deviation. We said a loss of 25.8 will result in a correction. We saw that short-term correction. We saw a top side deviation. We said a break over 26.3 will result in a continuation upwards. We saw that top side continuation, and now Bitcoin is challenging and retesting within this horizontal range. We're discussing that in today's video. Moving on, the DXY is on a rampage, breaking through that local neckline resistance. We can see that local neckline resistance represented by this red box. Pushing upwards, onwards and upwards, we are still expecting a move into this upper level of resistance between 105 to 106. Now, if the DXY continues upwards, this is going to be bearish for stocks and for cryptocurrency. So looking at the overall higher time frame directional narrative for the dollar, that is currently moving upwards, and therefore we can expect Bitcoin and stocks to likely move downwards as the high time correlation is around negative 0.7, which is actually strongly inversely correlated. Moving on to the stock market, with the DXY rising, the stock market has actually come down a little bit. We have seen a strong rejection from that upper level of resistance at 4,600. Around about 6% down to 4,400, 4,300. We do still expect a continuation downwards to the S&P 500 to retest one of 2 points. The horizontal level over here, or even the confluence point between the horizontal point and that uptrending diagonal support level of the rising channel formation we have been within for the last 8 to 9 months, okay? Quite a bearish structure, particularly if the S&P 500 breaks downwards. Moving on to the Dow Jones. The Dow Jones is on a cliff's edge right now, retesting the uptrending support that the Dow Jones has been above ever since October 2022. This is a 10-month-long support level that is currently being retested. A loss of this level will be quite bearish, and again, if the DXY continues upwards, which it seems like it is going to do so, it is possible and plausible that the Dow Jones could potentially come down. Moving back to the DXY really quickly, we do have a local area of resistance once more right over here. We are pushing into 104.5. This is going to be the next level of short-term resistance where we could potentially see some relief. If we break above, the probability for a continuation is very, very high. Let's go ahead, guys, and jump into Bitcoin. There is a lot to talk about today, guys, so we'll dive right on in. I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right-hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Starting on the weekly and daily charts. Before we discuss the 4-year cycle, before we discuss the probability of the 4-year cycle ending, before we talk about how low Bitcoin could go, before we talk about, if the bulls can reclaim control and Bitcoin can enter a bull run, we need to identify what is happening right now on the weekly and daily chart. What is going on? What is the narrative? What is the trend suggesting? What is everything telling us? So we'll dive in. At the moment, we are seeing Bitcoin, and it is currently in a weekly downtrend, okay? Bitcoin is in a weekly downtrend. We can see the uptrending support level. This level was our support over the last 8 or so months. Again, the support established within early January. So just under 8 months we've been in this uptrend. We saw numerous amounts of rejections and resistances play around that 30,000 to 32,000 level. And again, this level is a very key level of resistance, as we did see the $32,000 level act as not only a horizontal resistance, but as a high time frame bullish trigger that will result in the price entering a macro uptrend. We'll come back and discuss that later in today's video. As we can see, we had a fair amount of weakness in this structure moving on this uptrend, and I'll show you via the RSI. We had our head and shoulder pattern over here. We had our highs, our highs, our highs, and if we take a look at these high points, we can see we had this overall downtrend in the momentum. This was suggestive of weakness. So again, when we do see momentum falling and price rising, this can be identified as a bearish divergence. In this particular instance, we didn't have a high time frame bearish divergence, but if we look at the price cluster, okay, and we use the cluster meaning all the price action above this trend line, and we apply that RSI downtrend line, we can say the cluster of price action above is reflective of the cluster of price action represented by the RSI, which is a derivative of the price action above. And therefore, this downtrending trend line could be acting as a bullish trigger point for momentum if broken, and therefore is a resistance until not. Thus, this level of resistance, or should I say this RSI trend line, is indicative of the point of which the RSI needs to break above for the momentum to flip positive and for the price to break towards the top side of this respective high time frame resistance. And therefore, we did not see that occur, and thus we saw the price move downwards as momentum continued toward the downside, breaking below the uptrending level of support, again reflective of the local low points of support on this trend line. So what does this mean in layman's terms? Essentially, we had a high time frame uptrend that was losing momentum and thus losing strength. Eventually, that momentum decided to flip negative, and upon flipping negative, we saw the breakdown of this uptrending support level, officially putting Bitcoin in a weekly downtrend. Okay, so we've established what we are right now. If we're looking at the next key levels, a loss of the 24.4K level will officially put Bitcoin in a monthly downtrend. The monthly downtrend has the potential to span all the way down to the next level of support at 22.2 and even $20,000. Okay, these targets are not set in stone and are definitely not even expected unless 24.4K is lost. So if 24.4K is lost, we open up the possibility for this entire range below to downward price action, essentially. So we're definitely watching out for that. For the bulls to reclaim control on the weekly chart, we need to see the price break back above that 28K level, ideally the uptrending diagonal resistance represented by this same level of resistance which we broke down from. On a monthly scale, Bitcoin will need to break above 32,000. So before we get into the 4-year cycle, let's really quickly talk about why 24.4K is so significant, because we're going to come back to that in the short-term analysis later in today's video. So we go over to the monthly chart. We can see 24.4K reflected as the 50 EMA. This is our market cipher 8 indicator. The red line, this red line, squiggly red line, is the 50 EMA. We can see the 50 EMA is represented by 24.4K. If we go to the weekly chart, we can also see the midline of the Gaussian channel is represented by 24.4K. If we go back to that daily chart, 24.4K is a massive key level of liquidity according to the VRPV, as we do have a huge divot within that price range, and therefore 24.4K is a bearish trigger for a shift in the macro directional trend. Thus, a shift from a weekly trend to a monthly downtrend. Let's talk about the 4-year cycle, guys, because obviously a lot is going on right now. The weekly trend has been lost. The price is back below the upper band of the Gaussian channel on the weekly. The weekly momentum is flipping negative. The RSI has shown us a bearish trigger. The bearish trigger being the breakdown of the 62.9 point on the RSI. We'll go ahead and bring that one up really quickly. The 62.9 point on the RSI, which is of course a historically significant level in terms of bearish triggers and continuations towards the downside. We're seeing signs of high time frame weakness, and we're seeing things in this cycle develop from a technical point that we have not seen before. This poses a question: could Bitcoin continue lower? And if so, could the 4-year cycle potentially be over? So before we answer any of that, let's talk about what the 4-year cycle actually is. The 4-year cycle, to put very simply, is simply a date range trend. The 4-year cycle is this. This is the 4-year cycle. The expected date range on a monthly basis between our bear runs, our bull runs, and our reversal phases. Okay, if we take a look, the average bear market lasts between 13 to 12 months. Perfect. The average reversal phase lasts between 16 to 17 months. Okay, and the average bull run phase lasts between 19 to 18 months. That is the 4-year cycle. There is one more element of the 4-year cycle, which is going to be the percentage breakdowns from all-time highs to lows, but more importantly is this date range trend. Meaning, according to the 4-year cycle, the bottom has been printed at the end of the 12th month and the bottom is in. For the 4-year cycle to fail, or to be eradicated, or to be invalidated, this needs to happen. The price needs to lose this local low point at 15.5k within the next couple months before April 2024. If that occurs, the 4-year cycle will technically be over. Now, that doesn't necessarily mean Bitcoin is never going to enter a bull run again, because again, the key levels that determine price direction are, of course, these liquidity levels and what the price action does from an economic perspective, from a political perspective. But if we're looking at the 4-year cycle as a model, as a theory, if that local low is lost, that will mark deviation from the trend that we have seen play out over the last 10 or so years, and thus the 4-year cycle be over. What could potentially cause a 4-year cycle to be over? If we see interest rates rise again, if we start to see inflation rise again, thus bring up interest rates, if we see anything going off the US dollar, so BRICS nation, all these different political or economic factors could come into play to adjust or push asset prices down over a higher time frame. If we're looking at macro trends, we have to understand what moves price action, okay? Buyers and sellers move price action. Why do buyers and sellers make decisions? Well, it could be economic, it could be political, it could even be social. We saw when the banks were collapsing, we saw Bitcoin rally. So there's social elements to macro price action. If the macro environment from an economic, political, and social perspective shift bearish, which it currently is looking like it is doing, this could drive the prices down on a macro scale. So when could the bull run start? How low could Bitcoin potentially go? And what are we looking at on the technical levels? So if we do see this local low lost, where would be the next target of Bitcoin? We're going to be looking for the price range between $10,500 and $12,000. Keep it very simple. We're looking for that local trend line on the prior dotted trend line towards this horizontal level, which is going to represent the local high point on the monthly chart of June the 19th, 2019. Perfect. That is going to be the low. So if the local low gets taken out, the 4-year cycle fails, we're looking for that price point. Until then, the 4-year cycle is intact, and even then, the bull run could potentially develop. When does a bull run start? We look for 3 things. Number 1, we look for the price to enter the bull run phase. Perfect. That's quite simple. Number 2, we look for the price to break above the horizontal level, which is going to be a monthly uptrend trigger, right? These horizontal levels are monthly uptrend triggers. And number 3, we are looking for the price to break above the dotted trend line, which is a volatility trigger, okay? A volatility trigger meaning every time we are broken up that dotted trend line, we see the trend angle significantly increase. What does a trend angle suggest? Okay, it represents volatility, it represents momentum, it represents volume, it represents the strength of price action. If we take a look at the trend angle from our low points to that trend line, from that trend line to the high points, we can see the angle of the trend goes from 30 to 40 to 60 to 70 degrees, which signifies a bull run, as it signifies a surge in volatility, volume, and momentum, velocity. All of those metrics are increasing, and therefore we can assume that a break above $48,000 will trigger a bull run, provided it happens after April 2024 and this low has not been taken out. Let's go over, guys, and discuss the weekly chart and then finish up on the daily chart. Excuse me for 1 second. So moving over here, I did say about 5 minutes ago, there are a few things popping up that are warning signs and things we have not seen before. Specifically, very specifically, the breakdown on the weekly Gaussian channel. If we take a look at the monthly chart, we have never seen this occur before. What is this that I'm talking about? That is going to be a breakout of the Gaussian channel weekly chart, followed by an immediate breakdown prior to a retest of the dotted trend line on the monthly chart. If we take a look at the early bull run phase, the early cycle, we saw a break out of the Gaussian channel. We saw a push upwards. That push upwards allowed us to retest that dotted trend line. Okay, moving forward, if we take a look at the next one, we saw exactly the same thing, okay? The next one over here, we saw exactly the same thing. A break out of the weekly Gaussian channel. We pushed upwards. Where did we retest? We retested the dotted trend line. Only then after we went back below because of COVID. In this instance, we have seen a breakout of the weekly Gaussian channel, but a failure to push higher and a potential break through the Gaussian channel again, which could result in a full-blown correction towards the downside. This is a warning sign. This is something we haven't seen before, and this is something from a technical perspective that is suggesting high time frame exhaustion and weakness. Again, the bulls can bring the price action back, but it's going to take a lot of effort as the weekly trend is aiming downwards, and we do expect the price to continue downwards until the bulls are able to reclaim control. So how can they do so? And that all starts with a smaller time frame. For the bulls to reclaim control, 28.4 needs to be reclaimed. Very simple. Weekly bullish above over here. Okay. Until then, the bulls are of course losing control. If we see a break above this local high point 27k, we're going to see a continuation upwards and fill this gap. Okay, perfectly. If we see a break above 27,700, we will see a retest of 28.4. As of right now, we are in this bearish structure. Why do I say that? This is a horizontal channel. After a significant downtrend, this results in an increased probability of a continuation downwards. Furthermore, we have seen topside deviation, which represents an attempt for the bulls to reclaim control, but ultimate failure, which again resulted in a breakdown to retest this lower liquidity zone. If we see another breakdown of 25.8, I would expect that breakdown to be a confirmed breakdown, resulting in a move towards 25.2 to 24.4. If we take a look at the momentum, if we take a look at the volatility, we can see the volatility and momentum are still relatively low. The price action is sitting underneath the 50 EMA, which is suggestive of weakness. The 50 EMA is compressing towards the price action, suggesting volatility is falling. If we take a look at the RSI and CVD, the CVD has been falling as the price attempted to move upwards, which is suggestive of weakness and exhaustion. And of course, the RSI has been moving upwards, but the price has moved sideways and failed to break upwards, again representative of weakness and exhaustion. The trend is weak, the trend is bearish until 27k gets reclaimed. Thank you for watching, guys. I hope you enjoyed. My throat's a little bit sore today, so mind me for taking those couple pauses. Go ahead and check out the Crypto Academy courses at gmail.com. It is a link down below. I'll catch you guys in the next video. Thanks for watching. Cheers.